Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. So today we have our EIA show, and we want to look at the numbers because the EIA data was bullish, but we want to look at the data which was bullish across the board, but really how does this kind of fit into the global side? Because the global side is still a bit soft, but is this something where it's a bullish preview to it? Is there something behind it? So we want to look at how this kind of fits into other areas. And we'll talk about that mostly in segment 1 and segment 3. Then in segment 2, we're going to talk about the Memorial Day push. You know, we had that now. We should get one more bump. We're going to go through some of those key pieces. And then in segment 3, we really want to look at the physical market, because even though you had some good US data, the physical market is still soft. And we want to look at how is this being impacted heading into the OPEC meeting on June 4th, because that's going to be a very important piece to that underlying puzzle. So now as we turn to the data, globally speaking, here you can see total oil and products, the surplus widened slightly from 17.7 to 22.2. But given what happened here with the US data, that should come down. But it's important to look at in terms of where does that come down. And I think it's important to look at that movement lower is just going to move us back into the average. And that's what we've been saying, is that we're really just kind of hugging the average in total. So the total crude stocks, land and floating, surplus widened, that'll obviously reverse lower again, but not in a big way, just back towards the average. And this is the key piece when you look at the floating side, which continues to grind higher. And we want to look at how that Chinese buying is changing. Total oil and product stockpiles, you can see the surplus narrowed from 11.7 to 9.9. That should hold here just because the light distillate gasoline side continues to build. Globally speaking, in the US, we obviously had a nice draw. A lot of that is due to some of those issues with the imports that we've been talking about. But again, imports are still going up. We're at a 5-week high. We expect that to continue to grind higher, which again will put more in the US and kind of balance it between Europe coming down, US building. So now when we break it into the different pieces on the land side, total land storage, the deficit narrowed from 25 to 21.4. That'll likely widen again, especially given what happened in the US today. West of Suez, the deficit narrowed from 11.7 to 8.7. That again should widen just based on what happened with the US. East of Suez, the deficit narrowed from 13.2 to 12.7. If you were to factor in China, that is much higher. But again, it's just looking at some of the data points, because when we look at the floating side, the surplus narrowed from 16.3 to 14. That should actually go up. So, but when you look at it going up, we're just pretty much tracking 2022, which is kind of what we've been talking about and what our estimates have been to this point. West of Suez flipped to a deficit from 1.2 to 6.1. That's something that should reverse a bit higher. And the reason why is because of West Africa. So again, it's just going to kind of bounce back and forth. But the U.S. is still at 0. We got a nice, the import side is what we've talked about. Europe has continued to normalize. East of Suez, on the other hand, the surplus widened from 7.9 to 13.8, and that's something where we see the east of Suez as the problem point. And that's the issue that we're going to talk about more so in segment 3, the difference between West and East, because the West is a little bit better on the U.S. side, obviously, Europe a little bit worse. And getting a bit weaker, but the east of Suez is where we see a lot of those problems. And the question is, when does it bleed over into our market and have a much bigger impact? Stocks drew for crude. The draw was 12.46 million. When the aggregate was 1409. Again, we have one more month of draws coming from the SPR because of the agreement, as we've talked about, that was done in 2013, 2015. So the draw was 100% driven by Pad 3. Pad 3 had a draw of 11.4 million. There was, again, there's this timing delay right now between imports and exports. So one of the things that we talked about is we expected imports to come down. They did come down. We expected exports to stay strong. They stayed strong. So you had that balance, that mismatch where exports kept staying, remained elevated. That again, not changing. Imports dropped, and that here you can see impacted what happened in pad 3 because everything else is fairly normal. Cushing had a sizable build of 1.76 million. Again, it's right along the lines that we were talking about, and this is something where it'll balance out. That was a little bit higher. We should get that to come down a bit. So again, other areas, not too much to talk about. Crude oil here, you can see that there was a nice drop. It's realistically in no man's land at the moment. The question is it going to kind of follow where we were in 2015, move back to where we were in 2019? It's likely going to trend a little bit higher, but realistically, it's just going to be a little noisy at this point just because of that disconnect between those imports, exports, because exports are still robust based on the differentials from the Middle East. Again, it still supports buying from the U.S. That's not going to change, and that's going to keep our exports remaining strong. When you look at total oil storage and products, we had a nice draw from gasoline. A lot of that is that pull through for Memorial Day. That disconnect, remember, with the imports, there's still a lot of imports coming in. That's something, again, the timing delay that we've talked about. Distillate, though, still remains in a robust position. There's a lot of reasons why we're going to get some of that. But we also had some fires, some disruptions when we look at different things in general. When we're talking about the product side, that is going to, again, when you look at fires, obviously, or some disruptions, you're going to have refiners that are going to come offline. They're going to sell from storage. So then, as they come back, you start to see that balancing act. But they came offline. You had to pull from storage. So again, those are positive things. But we should see a little bit of a recovery, not much, just because we are coming into a seasonally bullish period. But we want to talk about how bullish that's going to be in the next segment. Or lack thereof, I should say. Pad 3 is where the drop was. You can see we're back to 2019 levels. We normally get a drop around this point in time, depending on where we sit. You saw it happen in 2022, saw it happen in 2018. It's always a question of when you have that nice drop because, you have some things moving through that disconnect with imports, exports. You can see the size of it is big because where exports are obviously more robust now than they've ever been. And because of the math in the market, that's not going to stop. Crude's Cushing, you can see trending higher. We expected to get back to that, really 2006, 2022 average. We don't see it going much above that in the near term. And the reason why is because of the exports. We do have some disruptions coming down from Canada. That hasn't shown up yet. That's something that will impact Pad 2. The question is going to be how quickly do they come back? They got a decent amount of rain in Alberta. That should help bring some of this under control. But again, the question is going to be rain. It's going to be wind, and can the firefighters and forest fighters get in front of it? When we look at runs came down about 0.3%. Again, it's right within the range that we talked about. There were some of those disruptions in Pad 3, which you could see was the driver of the drop. So as that came down, you had, again, remember, imports coming down. There's no reason to pull it in. Exports staying high, and then pulling some of those products in through the system. Again, when you look at the average, we're still very at the high end of utilization rates. The trend now, this will be the last low period because this is going to calculate for Memorial Day weekend, and then things are going to start back up next week. So again, that's where we're going to see that run up, and you could see normally the trend is up. There's ebbs and flows along the way, but the trend is going to be higher. We're going to keep moving to that level. Now, when we look at imports, here's that big drop. So we had a drop of just over 1 million barrels a day. That's 789,000 below the 5-year. You could see that Pad 1 had a huge drop. Again, some of that is just timing. And Pad 3 had that movement lower that we've talked about. Pad 2 was up 119,000 barrels a day. That's something that will pare back based on forest fires, based on some of those issues. Depending on how quickly that can be adjusted will dictate the level. But pad 3 should recover, pad 1 should recover, and that'll balance out some of that storage that was drawn down. Now, when we look at total crude oil imports, you can see that there was a big drop. But when you look at timing, you could see that seasonally speaking, the drop is a week later, a week earlier. And again, it's seasonal. It's still low. One of the things that we've been saying, it's going to stay in the lower end of the range, well below the 5-year average. That's not going to change. The question is going to be always kind of where we are in that backdrop in general. But again, we expect to stay within the low end of the cloud. Pad 2 broke to new highs. Again, that'll fall back down. We expect this to be somewhere in the upper bound of the 5-year average, on the higher end of the 5-year average, staying at the top end of that cloud range. When we look at implied demand increased 529,000 barrels a day. That's, gasoline increased 529,000 barrels a day. That's 651,000 above the 5-year. That's a net positive. Again, as we spoke last week, there's typically kind of that pull through for Memorial Day weekend ahead of it. There's usually a little bit more afterwards, so you get a nice spike and then a fade back down. And we're going to compare that against seasonal averages because that normally happens this time of year. It's actually, the spike is actually below where it was in 2022. But again, it's all a matter of where does it fall. Distillate had a nice bounce of 462,000 barrels a day. That's a bit of a normalization. We expect that to roll over. Gasoline, distillate's going to roll over pretty sizably. Gasoline, again, it's going to bounce, and then the drop is going to be softer just because of the season we're in. Now we're past Memorial Day. You're getting into that traveling season. Jet is staying pretty low. I would say that there's going to be a makeup number likely next week. You'll get a nice bounce. But again, it's still going to be on the lower end, or at least within the range that we've highlighted. Propylene, nice bounce. It's just in general, it'll be fairly stable, if not anything, a cheat to the downside. Now, when we look at gasoline, it's important to look at it. We're still below where we were in previous years. Obviously, we're still even on the lower end in comparison to other periods. Obviously, as we've talked about, when you looked at April, Easter and that spring holiday, that was the last spike. But the highs are going to get a little bit higher, the lows are going to get higher, so you're going to see that normal move. The question is, what is normal and where are we now? And you could see that we normally get the spike depending on where it falls. Here you can see that there should be one more move up, and then we'll get a movement down, not back to the lows, but back to something closer to about 8.8, and then we'll continue to trend higher and likely peak out on an average basis 9.3, 9.4. We will get upside to that just based on holiday weeks, but then that's kind of where we see this averaging as we go through the remainder of summer. Days of supply, again, fairly normal just because, and even though we had a sizable draw, we're still pretty comfortable when you look at the refining side, so that's why this is fairly stable. Gasoline trending towards the 29-year average. That's something where, when you look at it, we're following 2022 at this point. We thought we were going to have a move closer to 2019. You can see that there's now the comps are going to get a bit harder. We do see a bit of a bounce, but it's all going to be depending on when do the imports get registered. Because right now you had a decent amount of product coming out of storage because you have a Memorial Day weekend. You had the hiccups with or at least the refiners coming offline. You had imports, slow to move into this week. They got pushed into next week. All of these things, you saw a nice draw. So then when we look at distillate, again, staying to the low end. The question is now, as we've been saying, that rate of change, and you're starting to see some softness in the exports. Because refiners came offline, you had some softness in refinery production, which again kept some of this moving through. And then you still had diesel moving into the system, just because things have been fairly low. They're going to stay fairly low, but you still need diesel at gas stations. So again, it's going to be a little bit lumpier on that side, especially when you look at jet. Jet is moving to a higher end, and now it's going to be a balancing between jet our kerosene and distillate fuel. On a curve basis, you can see that it's fairly flat pricing. The curve is still supportive of activity. We don't see that changing, especially when you look at the supply side. And we'll talk more about OPEC in segment 3. Then when we look at some of the things that are happening on the floating storage side, again, floating storage is still low. It's going to be a matter of that timing delay of it showing up. When does it get registered? So we think this will have a bounce just based on what we're seeing in the water. But again, bounce to 2022 levels. We don't see this huge correction. So again, that's something that's going to be a bit of an overhang. So that's what we have for you in segment 1. In segment 2, we're going to go deeper into Memorial Day weekend. How does this compare to other Memorial Days and other holiday weeks at this time period? And what does that mean for setting up for the rest of summer?